Ladies and gentlemen, good day and welcome to LTFOODS Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Lavita Lasrado. Thank you, and over to you, ma'am.
Thank you. On behalf of Mirae Asset Capital Markets, we welcome you all to the Q2 and H1 FY25 results conference call of LTFOODS. We have with us from the management team, Mr. Ashwini Kumar Arora, MD and CEO, Mr. Sachin Gupta, CFO, and Ms. Monica Chawla Jaggia, Chief Corporate Development Officer. We will begin the call with brief opening remarks from the management team, and then we will open the floor for the question and answer session. I would now like to request the management to share their perspective on the performance of the company. Thanks, and over to you, Ms. Monica.
Thank you. Good evening, everyone, and thank you for joining us on our half-year and the Q2 financial year 25 earnings conference call. Before we start with the key highlights of the quarter and the half-year ended 30th September 2024, I would like to highlight that certain statements made or discussed on the conference call today are forward-looking, and a disclaimer to this effect has been included in the results presentation shared with you earlier. Result documents are available on the company's website and have also been uploaded on the stock exchange. A transcript of this call will also be made available on the investor section of the company's website. I would like to begin by taking you through the key highlights of the half-year financial year 25. Our consolidated revenue for the first half increased by 12% to INR 4,222 crores versus rupees 3,781 crores in H1. Financial year 23. This is on account of increased sales from the Basmati and other specialty segments, as well as increase in the convenience and health segment. Gross profit stood at rupees 1,428 crores, and the gross profit margins expanded by 160 bps from 32.2% to 33.8%. EBITDA increased by 7% to INR 514 crores compared to INR 479 crores last year. EBITDA margins was 50 bps lower at 12.2% on account of increased freight rate. The profit after tax was higher by 4% at rupees 306 crores versus rupees 295 crores last year. The earnings per share increased by 3% to rupees 8.71 versus rupees 8.45 in the first half of the financial year 2024. The cash profit increased by 7% to rupees 393 crores versus rupees 366 crores last year, and the net debt reached to 546 crores versus 569 crores in the last half year. Moving on to the key ratios of our balance sheet, the return on capital employed stood at 20.8% in first half of the financial year 25 compared to the first half of 24, which was 21.6%. Return on equity stood at 17.1% for the first half of 25 compared to 19.5% of the first half of 24. The debt to equity ratio maintained at 0.2% in the half year 25 versus the half one of the 24. The debt to EBITDA ratio at 0.8 is in compared to 0.7 for the last year. Current ratio improved from 2.4 is in the first half of 24 to 2.5 in the first half of 25. Our net working capital days stands at 195 days versus the 174 in half one of the financial year 24. I'll talk about the quarter. So our consolidated revenue for the Q2 financial year 25 was up by 7% to rupees 2,134 crores versus rupees 1,992 crores last year on account of increased sales from all the segments. Gross profit grew by 17% and the gross profit margin was 320 bps higher from 30.9% to 34.1%, attributable to the higher contribution of premium products and also the growth in the organic segment. EBITDA for Q2 was flat on year-on-year basis at rupees 256 crores and the EBITDA margin stood at 12%. PBT was slightly lower by 6% from rupees 211 crores last year to rupees 199 crores in the Q2 financial year 25. PAT for the quarter decreased by 4% to rupees 151 crores compared to rupees 157 crores in the previous year. EPS decreased by 5% to rupees 4.3 versus rupees 4.5 in the Q2 financial year 24. And the cash profit for the quarter was higher by 1%, that is rupees 196 crores. Now we will open the floor for the question answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Amit Doshi from Care Portfolio Managers Private Limited. Please go ahead.
Yeah, thank you. So this higher other expenses, would it be completely attributable to the freight cost, or is there anything else that we need to know?
Hi, Amit. Yes, this is attributed to the, this Red Sea impact, the higher freight cost.
Okay. I mean, so last time I believe you had, shared, what is the impact in terms of percentage. So can you share similar numbers just for the purpose of our analysis?
Sure. Let me give to Sachin. He will.
The impact of the Red Sea, the logistic cost increased by 1.8% as compared to the revenue this half year.
So 1.8% compared to last H1?
Yes. So it is now 6.6% of my revenue as compared to 4.8% last half year.
Okay. And any trend that you would want to share on the freight cost? I understand that it will be difficult to predict, but general sense of how much higher if further likely it can go, or anything on that.
Actually, we have our inventory, so this impact there will be impact in the third quarter as well. Yes, the freight costs have more or less normalized, and we are expecting it to come back in the fourth quarter and the later part the next year. So this will be normalized.
Okay. In terms of our inventory, so just wanted to know what is the current, market prices trend after the new prices opened, which we understand, we believe that it has opened lower, and what is our strategy towards it. And second, regarding inventory, like, is our higher cost inventory now kind of over? And if not, trying to understand how the inventory is valued. So, for example, if the current prices are say 20% down compared to last year, then do we kind of book loss for the updated market value of the opening inventory?
So, Amit, one is that we value the inventory at a cost. The second thing is the new crop is good, so we are expecting the prices to come down, but it is not going to impact on the old crop. So, the new crop is better by 10-12%, and we are assuming that the paddy prices is coming down, and that will improve our margin in 25, 26.
Okay. And so how much prices have opened lower?
Roughly, it depends on variety to variety, but in the range of 10 to 17% or range. That is the range.
Okay. In terms of depreciation also, I note that there is a big jump in the depreciation cost, while our fixed assets broadly in same. Of course, I noted that capital WIP has moved from 41 to 116. So can you just clarify on that part, depreciation as well as this capital WIP?
Just a minute.
Yes, depreciation because certainly there has been certain capitalization that has taken place in the last year. So this depreciation has increased. So my current depreciation for this half year is 87 crores as compared to 72 crores. This is because of the capitalization of the fixed assets that has taken place in the year.
Okay.
And as regarding the WIP, the major WIP that sits in my financials is the capitalization of the UK unit. The UK unit, which is to be capitalized in the later part of this quarter. So that is there in the capital work in progress. That will be capitalized this quarter.
Okay. And our other income is also quite up from 14 to 26 crore. What is that regarding?
So the other income includes certain charges which we charge from one of our associate, the Golden Star. So that because its revenue is increasing and we are getting that charge from one of our associates.
Okay. And overall, I noticed that jasmine rice we have launched even in the brand of Dawat. So is it launched at global level, India level, and what is the potential of this the Thai rice, the long grain rice that we have acquired, from Golden Star?
So jasmine is very popular, across the world. In fact, it is 5 times bigger in America, and that's how the Golden Star has become the #1 brand in America. So as far as India market is concerned, we have launched our jasmine. That's a small market, but that's the portfolio we wanted to build. Where as a brand, we are fulfilling the need of around rice. So we have got a good response. We have launched in Israel also. We are going to launch in the other part of the world also. So we are, positive on adding the jasmine rice to our portfolio. Hello, Amit? Hello, Amit?
Yes.
मेरी आवाज आ रही ना?
I can hear you.
Is this Amit?
I think you were speaking to some other Amit.
The next question is from the line of Meet Jain. Please go ahead, sir.
Hi, sir. I'm audible?
Yes.
Yes, Meet.
Yeah. So my question is on the gross margin. We saw gross margin expansion of almost 320 basis points this quarter. However, in the base quarter, the margins were a little subdued. And sequentially also our gross margins are a little flattish. And when we rationalize that, we saw that this is because of the higher mix of premium product and organized segment. So how much further can we see a gross margin expansion from current levels?
So yes, Meet, you are right. Our gross margins have expanded in this half year. So from 32 base, it has increased to 33. So this has contributed because of certainly the mix of the premium segment, and secondly, our organic segment also has. If you look at our organic segment, there has been a growth in the EBITDA margins and as well as in the gross margins. So that has contributed in the gross increase. Yes, we are focusing on increasing as our brand spend is increasing, and we want to increase further this gross margins to 34 to 35 levels going forward.
Okay. Other question is on the macro environment on the rice, basmati rice. So we have been growing at a very good pace of around 15-20% over the last few quarters, and this quarter basmati rice growth has been around 10%. Can you talk about some demand challenges?
Can you speak louder little?
I'm audible, sir, right now?
Yeah.
Yeah. So just want to understand, are we facing any demand challenges, like any region, location, geography, if you can mention?
No, we are not facing challenge. Actually, whichever part of the world we are present, the category is growing, be it USA, Middle East. Middle East, we have grown, 34%. In USA, we are growing. In India, we are growing. So we are not facing any demand challenge. Rather, we are expecting to, further grow this category. In India also, India is a 100 million ton rice consumption, whereas, basmati is just 4 million ton. And we expect, the category to grow. And similarly, in other part of the world, we are positive about, the category growth.
Okay, understood. And on this Shalik partnership, so can we talk about that? How has been the progress on that part?
So that's progressing well. As told in the last meeting, we have appointed distributor, and there's better news is coming. We are under process. Maybe in a month's time, you will hear a good news.
Got it. And my last question is on this inventory days. We have seen increasing inventory days. So can you throw some light on that? What is the main concern? Are we facing any inventory challenges or something on that part?
Yes, our inventory days have increased from 166 to 194 days, so that is an increase of 28 days. This inventory days actually, in order to cater the increase in the demand that we are seeing in the different parts, as Ashwini ji has said, no? In different regions, in India, in US, we are seeing that kind of demand. So considering that kind of demand, we need to maintain that inventory levels. So this is to have that increase, meet out the increased sales.
Can we expect this to come down 3Q and 4Q?
So yes, of course, we will be maintaining the ROC at a level of 20 plus, and the inventory days will be, of course, in line to that ROC level. So we will be maintaining the 20 plus ROC levels in the going forward quarters or years to come. Yes, inventory days this September, because we had to build up for the increased demand. This will, in the March, we are more or less be at the same levels of the inventory days that we were in the previous March, 4-5 days here and there. Yes.
Okay. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up questions, you can rejoin the queue. The next question comes from Sakshi Chhabra from Swan Investments. Please go ahead.
Yeah, hi. So my first question was, I wanted to just understand that in the first half, there has been an increase in the short-term borrowings to the tune of 285 crores. Can you just explain why that was?
Just a minute.
The short-term borrowings, yes, but if you compare our net debt, so we have a balance, bank balance as on 30th September, and that is to the tune of 270 crores. So if you compare it with if you reduce that, our debt balance has in fact reduced from the last September as well, and so that is in fact reduced by 22 crores in this. So we have. So there is a cash balance that is sitting in my financials.
Okay, but this short-term borrowing was to meet working capital needs, or?
That was a working capital need, and actually that got transferred in the later part of this quarter. So there was a cash balance as well as there was certainly this the borrowings.
Okay. And this degrowth that we've seen in the ready-to-eat and ready-to-heat segment, so is that only pertaining to one segment that has been discontinued, or has there been an overall degrowth?
The ready-to-eat and ready-to-eat has grown by 8%, so there is no degrowth in this.
So the growth in H1 is 8%, but in Q2 there has been a degrowth of 15%. I'm referring to the Q2 degrowth.
So we have discontinued, or rather we are going to discontinue our Seher, the fortified rice. That we are in the process of, but our ready-to-eat and ready-to-cook is growing. Rather, we are building another capacity in USA.
Right.
Yeah.
Okay. So, in the medium term, what is the expectation of growth from the ready-to-eat and ready-to-eat segment?
So we are positive on ready-to-eat. Yeah. So that we are expecting, in USA, in H1 we have grown our 33% ready-to-eat, and we are positive, in a 3-4 months we will be up by the new facility. So we are positive double-digit growth in ready-to-eat and ready-to-cook. And some products are, in the pipeline.
Okay.
Yeah.
Okay. Thank you.
Thank you. The next question is from Yash from Stallion Asset. Please go ahead.
Hi, thank you for the opportunity and congratulations on a good revenue growth. So my question, was that, in Middle East, we've seen a very good market share gain, almost 300 basis points, borne by. But I'm just trying to understand that, we just added one distributor in Saudi Arabia right now, and, given that our partnership with SALIC has already been 1.5 years, so what is stopping us from going a little bit more aggressive in that region, given the pressures that our peers are facing? When can we expect some more aggression in terms of adding more distributors and expanding our market share over there?
Sure. First of all, thank you, Yash, for all your appreciation. On the Middle East, it takes time to, plan the things. And as I said that, we are very positive in the next month time, you will hear a good news. And as a style of LT, we are positive and that, we will have a good position in Saudi Arabia. Already, in Middle East, we have covered, which is, the lower Gulf, we call it Dubai. In Dubai, our share in premium segment as per Nielsen has gone to 9.8% from 6.2%. We are improving our market share in Kuwait, in Qatar, in Muscat, and Iraq also. Now, the strategy is in place. The distributor has been appointed, and we are hopeful that we will do good in Saudi Arabia. And as you know, in a consumer business, it's not a trading business. Consumer business, takes time to to build.
Sure. Okay. Thank you.
Thank you. The next question is from Yash Mishra from SKS Capital and Research. Please go ahead.
Hey, hi, this is Shubhankar here. So, a few quick questions. With respect to your H1 number, does it have any revenue contribution from your UK operations?
Yes, the revenue, there is a contribution from UK. I will tell you the number.
There is around 8 million contribution that has come from the UK operation.
Can't hear you.
That is 80 crores.
80 crores. And what is it that you expect for this rest of the financial year?
So we are expecting a revenue of 24 to 25 million pound this fiscal year.
Okay. Secondly, so you said your freight cost will continue to be higher in quarter 3, and then quarter 4 you expect this to normalize. So basically the trend is we had 5% of revenue as freight cost in quarter 1. Quarter 2 it is you said 6.6%.
6.6%, yes.
So Q3 we expect this number to be here. You expect to go up a bit, and then quarter 4 you want to come down.
Yes, it will be in this lines itself. So it will remain as such. Yes, we are focusing on improving other operational efficiencies, bringing in more operations so that we deliver the kind of profitability which we are delivering. So yes, the freight cost will remain more or less at 6% to 6.6%, this level.
Not going to go up from here, basically, you mean to say?
No. this won't go up.
Okay. And then, with respect to your ready-to-heat and ready-to-cook, so this basically has had a 9% EBITDA, loss, negative. So H1, you had a break-even at 100 crores of revenue. But for quarter two on a 44 crores revenue, you had a significant lower OPEX, it seems like, right? What level you will again break even, because you exited one brand. So what level you going to break even?
So we will be breaking even at a revenue of around 350 to 400 crores. So that will be the break-even point, and this we wish to achieve. We have a plans to achieve at 2 to 3 years time frame. So that's the break-even level.
Okay. Okay. And finally, so with respect to the Supreme Court verdict for the insurance-related matter, we thought that because it is already a couple of months, we thought that there will be something final, because after the Supreme Court verdict, you got in written, so the money should have hit your bank in a month time. But it's been 2 months. There is no update on the same as of now.
Yeah, that's true. Yes, we have one in lower court, we have one in high court, we have one in Supreme Court. But executing court, takes time. They will take date and all this. So we all know that the system. But I think everything is clear. It's a matter of some days only.
Okay.
I expect that.
Okay. All right. Thank you and best of luck, sir.
Yeah.
Thank you. The next question comes from Pradyumna Chaudhary from JM Financial Family Office. Please go ahead.
Yeah, hi. So the first question is on why, last year was a year of higher paddy prices, right? So why have we really seen a decrease in input costs for this year? Ideally, it should have gone up, right? That's the first question. Second,
can you repeat your first question? Last year prices were high. Yes.
Last year paddy prices were high, right? So ideally, 1 year later, the input cost should have actually gone up. While in our numbers, we can see that the input costs have fallen. So why would that be?
Input cost has not fallen yet. So you mean to say you are referring to gross margin?
Yes.
But we have taken the price hike also. Yeah.
So then our revenue growth in Basmati in Q2 was only 3%, and volume growth was 7%. So despite the price hike, the value growth, that is, as in the average realization growth, has actually been in negative territory, right?
Let me check the number, but it depends on the mix. As we play on a different price point. So sometimes the mix, some quarter the mix changes. But answering to your first question, the gross margin has increased because we have taken a price hike also, whatever the comparative to the price input cost increase.
Okay, maybe later in the call, if you can just double check on this, because I'm very surprised. 3% revenue growth in Basmati, which is suppressing our overall revenue growth as well. Yeah. Where in a quarter where we have taken price hikes, that somehow is not adding up.
Just a minute, Sachin.
So the GP margin improved because as a percentage to the cost increase, we have increased the sales price. So our GP margin has improved, as you can see in the quarterly or the half yearly results. Yes, if we have to compare our quantitative growth in this half year, the quantitative growth is almost as equivalent to that of the growth of my revenue. So we have increased by 12% in the quantity terms. The revenue, the price, is just a mix that has changed. So that has increased my overall margin levels in this half year of this quarter.
No, so just sorry, just trying to clarify.
Mm-hmm.
I'm just talking about Q2. Our basmati volume growth was 7.3%. Our revenue growth was 3%. So, roughly the realization was down by 4% for us. So you're saying this 4% decrease in realization is all because of mix change towards lower value?
Because of the product mix, the mix in the product that has given. Otherwise, our GP margins have improved. If you compare the quarter-on-quarter basis, our GP margins have increased in this quarter.
And why would that be? Customers downtrading, is that the case?
Because of the mix, actually, it depends upon the different. We have in a basket. If you we have a three range, a $3, $2, and $1. $3 contributes around 40 to 45% of the GP margin. $2 contributes at 30%, and a $1 20%. So a mix change, of course, has a positive effect on my GP margins. That's what we were explaining. The GP margins from here, as the marketing spends are improving, and we are so our GP margins, yes, will improve. Yes, our spend will also improve, and yes, it will have a long-term effect going forward.
Fine. And second was, I understand.
Mr. Chaudhary, sorry to interrupt.
No, this was first question. Sorry, this was just a follow-up because I couldn't get the clarification. My second question is remaining. So on the second question, yeah, I understand that freight increase was there, and we previously spoken about 4 crores a month of freight cost increase. But if I look at other expenses, YOY, it's gone up by 96 crores. Right? So what would explain the difference? I know the freight cost increase would add up to around 12 crores, and digital expense would add up to another 12 to 15 crores. But that should be maximum 25 to 30 crores of increase, whereas our other expenses have gone up by around 96 crores. So what explains the remaining?
So if you compare it with the half year numbers, other expenses in this half year is 676 crores as compared to 523 crores the last half year. So in that, the major spend increase is the logistic cost. The logistic cost from 270, it has increased by almost 100 crores in this territory. Yes, there has been certain increase in other costs as well as the scale of operations, and that is in the percentage terms has remained the same more or less as the revenue. The major increase has come as change in the percentage that has come in the logistic cost.
But earlier we were guiding for 4 crore increase per month, right? In logistic cost.
No. That all depends upon the business also. No? The business has increased, and that has resulted. But yes, the business overall has increased. The cost as a percentage, I've just told you that it has increased by more than 1.8% in the logistic cost. So an increase of almost 100 crores. So that's 40 to 45 crores a quarter increase. Business that has, because of the two factors, the business increase and as well as the Red Sea effect.
All right, I'll join the queue. I'm not very clear on the answers given, but I'll join back the queue. Thank you.
Thank you. The next question is from Yash Mehta from Art Ventures. Please go ahead.
Sir, I wanted to ask that a decline in 80 basis points of the EBITDA margins, how much of this is attributable to the Red Sea crisis? How much of this decline is attributable to the Red Sea crisis, sir?
You mean to say the decrease in the EBITDA margin?
Yes.
So, as we said that, our logistic cost has increased to the revenue 1.6% as compared to, last year. So, I will say half it will go because the natural, freight cost has increased that we have already taken in our pricing. But roughly, I will say in the range of 1% has really attributed to the Red Sea.
Okay. 1% of the 80 basis points, right?
Yeah. So roughly, we have impact of 27-28 crore rupees on our budgeted number. Let's see, that counts for 1.2%.
Okay. And sir, what is the volume growth that you see that you will be able to achieve in FY25? And what are the margins do you see that you will be able to achieve at the end of the year?
So as per, earlier guidance given, we will be having a growth of about 10%, and the EBITDA margin will be in the range of 12%.
10% is the volume growth, right?
10%. 10%. 10-11%, whatever we have done in H1.
Okay, and this is for the full FY25.
That's right.
Okay. Thank you, sir.
Thank you. The next question comes from Hitesh Goel from Riddesh Advisors. Please go ahead.
Thanks, sir, for taking my question, sir. I just want to understand in 2Q, what was the basmati revenue growth in India and exports? Because it's only 3%. So basically, is there a big decline in the export segment? In 2Q only, I'm talking about.
As compared to last year. So I think we can explain that, but the good thing is to measure, H1, so that we have grown, 11.7%.
No, I understand that, but I'm just trying to understand, is there some one-off because of Middle East crisis or, some kind?
Nothing is.
So can you give those numbers so that we have some sense on India and export, on 2Q only?
Sure.
So in the growth in the India market is 9%, whereas the international market we have grown by 5%.
No, but the overall revenue growth is only 3%, no? So how these numbers don't have
quantitative growth. So quantity-wise, we have grown. Where in this, if you compare it with the overall market revenue-wise, so we have grown better in India. The value terms, that is 10% growth that we have witnessed in the revenue terms. And the international market, it is there is a growth of on a year-on-year basis, there is a growth of 2% in the value.
No, but this is not adding up, no, sir, because your growth overall is only 3% revenue, which you've given in slide.
Growth in the basmati category, if the specialty in the basmati category.
I'm talking about only basmati. I'm not talking about the organic. Internationally, is there a decline in basmati? That is what I want to understand on a YoY basis.
So the basmati market, we have grown by 4%. 4%. So there is a mix. There is no. So international contributes almost 65% of my revenue. So there the growth is almost 1.5%, whereas the India market has grown outpaced. So there is the difference, no.
And mix you said is adverse, right? Because revenue in 2Q only. I'm not talking about 1H.
I'm also talking about the Q2 year-on-year basis.
But then, how did the gross margin improve if mix is adverse on a YoY basis?
Mix in the mix also. Now you have different categories of products. So we have a premium product. There is and in that also there are certain products which give me a higher margin. On the $2 also there is certain products which give me a higher margin. So we are focusing on the products which give me more margins. So we in fact that's the reason in spite of having a lower increased margins, we are able to increase the revenue growth. We are able to have a higher GP margins. So our focus is bettering our GP margins.
Yeah, that's fine. So my second question is in the international market, the Middle East, if you look at 1H also, your rest of the world growth was only 7%. So Middle East is growing fast. So which market has got impacted? That our revenue growth has got impacted?
So the European market that has impacted, and that too because again we want to focus on more margin where the margins are growing. So that is also we want to focus on high margin markets. So that's the reason.
So is there a stress in exports that, or are you seeing revival in second half in terms of growth?
Oh, no, there is no stress. In fact, we are growing in the different markets. Yes.
But can we achieve 10% kind of growth in exports in second half? Are you seeing that kind of orders?
Yeah, that's what we are expecting, and that's the guidance we have given in full year basis.
Okay. Okay, sir. All the best. Thank you.
Thank you.
Thank you. The next question is from Resham Jain from DSP Asset Managers. Please go ahead.
Yeah, hi. Good evening, sir.
Good evening.
So, I have a couple of questions. So, first one is on organic business. Last, I think, 5-6 quarters after some issues last year, we have seen a continuous growth in that business. So, if you can just explain what is driving the growth in the organic piece.
So, every product is contributing, rice, of course, and then, soya also, and, other, the product portfolio, which is, the oil seeds. So all categories participating, but bigger is the rice.
And sir, this business, how are you seeing growth here? Because we had this import-related issues from India, and then we have set up our some of the sourcing from African region. So from the growth perspective, how are you seeing visibility here in the next 1-2 years?
We are positive on, we are expecting again, 10 to 12% growth in organic also. Our stock and sell in Europe and America is really helping us and strengthening our organic business. What we are doing is to the main growth drivers, we are adding is to source from the other part of the world also, like, we are sourcing from Africa, we are sourcing from Brazil, to add more product in our, stock and sell portfolio. So, we are expecting, with this incident of soya, we have learned that, we should not, get into very commoditized organic business. So we learned from there. We have, again, we have catch up. Now this year we are expecting to do more than 1,000 crore in organic. So that's building up. We are expecting both in terms of the growth and margin expansion.
Right. And sir, recently there's a non-basmati rice export. There has been some relaxation. In the past, I remember that there were like certain opportunity on that front, and which you cashed in 2-3 years back, if I'm not wrong. Are you seeing that also as an opportunity from the export market perspective?
Definitely, Resham, we will evaluate, the opportunity. And normally, we are not into non-basmati business and business which is not sustainable in nature. But in a branded segment where, the sustainability comes, we will definitely evaluate. But this is a positive news for overall, the industry.
Understood. Okay. All the best, sir. Thank you.
Thank you, Resham.
Thank you. The next question comes from Shivam Dave from Prodigy Investment. Please go ahead.
Yeah. Hello. Am I audible?
Yes, Shivam. Yes.
Hi. I wanted to understand on that disclosure that we had a substandard quality rice. Any color on that, on anything that you have?
No, this is a very normal thing, so I keep collecting samples. So they have not awarded any this thing on us on any. So they have picked up on the basis of this, and then it will get to lab, and then the final result will come. So the weight and measurement and precise,
Okay.
Yeah, yeah. So nothing, no harm, nothing, all is in control.
Okay, fine, cool. The second question I had is on the ready to heat and ready to cook segment. Now, when I look at the last 3 quarters, we have grown about 30% in terms of volume growth. But then this one quarter, I think we've degrown by 15%. What is the reason for this sudden sharp decline in volume growth?
As you know, our RTH and ready to cook business is growing. It's the only one product, we have discontinued, in the phase of discontinuing is Daawat Sehat, which we were selling in India. But, the main business is growing, which is RTH and ready to cook business.
Okay, so I think can one product make such a big impact on your volume growth? I mean,
it's just some, it's a new business for us. We are learning also from there. And Daawat Sehat was 18.5 crores of business. Okay. So 18.5 crore business we lost. We have not lost, but we have discontinued. Yeah.
Okay. And just one follow-up on the ready-to-cook segment. How is the working capital cycle for that? Is it lower than our basmati business, or is it on the same lines as it?
Ready-to-cook?
Yeah.
No, that's it. But वो must be 90 days working capital cycle.
The whole cycle as such, right?
Yeah.
Okay, that's it from my side. Thank you.
Yeah.
Thank you. The next question is from Mohammed Patel from Care Portfolio Managers Private Limited. Please go ahead.
Yeah, hi. So my first question is, so how much more in volume terms will be buying inventory as compared to last season?
How much we will buy?
Inventory, how much more we will buy
that is as per, the growth we will buy as per our demand. So we are growing in volume terms, 10 to 12% year on year. Accordingly, we will source our.
I was just trying to understand if you will take the advantage of lower prices and buy more.
We don't, we may, it depends. The season has just started. So we will see that how the pricing behaves. Maybe, we will source more. But it depends, it's too early to say that. And we don't want to speculate on that.
Okay. My second question is, we have relaunched the Royal Atta. So what are your thoughts on the same?
So, that's doing good, So we have launched Royal Atta 6 years back, this India little destruction on the wheat flour. Again, we have started importing wheat from importing wheat and then processing and selling it again. So we have relaunched it, kind of thing.
Where are we importing it from?
That's adding on. That's not a big ticket to our revenue.
Okay, thank you.
Thank you. The next question comes from Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Thank you for the opportunity. Good numbers considering all the challenges. Just 2 questions, sir. Regarding the insurance claim, you mentioned that you have won a district court, high court.
Yes, Abhishek, just explain that, we have won in all courts, but, in the executing court, it is taking time, sometimes judge is not there, sometimes another party takes date, but it's a matter of few days, I think, we should get our money.
So is it that you only once you get the money in the bank, then only you will recognize the exceptional gain, or will you wait for the written order from the high court, from the relevant court, and then recognize?
No. The court has already awarded in our favor. Okay. Now it is the matter of execution, and execution court is taking it up. but it is taking, as usual, in a judiciary, 2-3 months. So hopefully,
So October to December, probably we should see the exceptional gain in our book.
yeah, we are hopeful. Now the next date is 5th of November.
Okay.
And, we are hopeful, for the resolution.
Okay, thank you. Lastly, regarding the freight cost, I think as Sachin sir mentioned that Q3, obviously, because of shipments, the cost will be higher. But Q4 onwards, should we expect normalization, or only from first quarter FY26 should we expect these costs?
Quarter 4 to quarter 1, you will see a better performance. There will be some leftover because it takes for us to reach always in water, in store, we have a 5 to 6 month inventory. So hopefully quarter 4 will start improving.
Okay.
And quarter 1, we are positive. Yeah.
So, but freight cost.
Yes.
Yes.
So I said, as per today's situation, we are in freight market.
No.
It's coming down. We are.
What I'm trying to say is, so the freight costs have come down to pre-Israel crisis level, Israel attacks level, right? Because it had moved up, it has come down again. So 6 months ka inventory you have. So probably from Q1 onwards, we should expect it should come.
Yeah. So little bit improvement should come in quarter 4, and then quarter 1 will be more clear.
Understood. Thank you very much, and all the best.
Thank you so much, Abhishek.
Thank you. The next question is from Rohan Patel from Turtle Capital. Please go ahead.
Hello.
Yes, Rohan ji.
One of your opening remarks, you said that we are having good crop this time. The crop offtake is good by 10-12%, and paddy prices are down. So can we expect that we maintain our gross margin, or we are going to also expect the gross margin to be coming down as well?
No, we will definitely maintain and improve, and that's what we are expecting. Because it's another 2 months, 3 months in the months we will source, but we are optimistic that if the sourcing price remain the same, which has been open up, then we are expecting to have a better margin in 25, 26. That's the kind of what we see.
So we can expect that your EBITDA margin, if you can provide any guidance, to be somewhere in between in the lines of 12 to 14%.
Yes, that's the guidance. 12 is already there, so we will improve from there. Yeah.
Second thing that I wanted to know as I'm new to you, so how are you getting to the UK market? Like, I'm asking from sourcing point of view, because if you see, sale of basmati rice was banned from India to UK and Europe due to pesticide residue issues. So can you just explain me how are you sourcing from which geographies?
No, it is never banned. But there were some issues where the Indian product was not matching to the MRL level of UK or EU. But as an LT, we have a big farmer program where make sure that we have a product of compliant product, and we are doing our regular export to UK and EU. Sometimes our EU unit sources from Pakistan if India is not competitive. But as an LT food, we are regularly exporting our brand from India. Dawat, both UK and EU.
And even if we have to see the international operations that you have in America as well as in UK, so all the rice are being sourced from India, or you have some more diversified geography? You want to keep diversification on geography for sourcing?
So we call it specialty rice. We have So in specialty rice, we basmati, we do jasmine rice, and we do the regional specialty, which is Sona Masuri and So Sona Masuri and basmati for America, we only source from India. As far as European, we call it EU and UK, partly we source from India and partly we source from Pakistan. But all our brands in UK and EU goes from India. So the rice we do the private label for the stores, that is done by India and Pakistan. I hope that clear your question.
Definitely. And
Sorry to
now you have
Mr. Patel, may we request you return to the question queue for follow-up?
just last question. This
So
is
there are
just
many
last
other
question.
participants waiting for their turn. Extremely sorry, sir. The next question comes from Tom A. Kadavil from Geojit Financial Services Limited. Please go ahead.
Yes. I just wanted guidance on the depreciation for FY25 and also the share of associate profit for FY25.
Just a minute.
So the share of profit for the associate in this quarter, this half year was 19 crores, and for that's what your question was, no?
Yeah,
The share of profit?
for the entire year.
So that will be in the range of around 30 crores. 30 crores profit that will be coming from the associate.
30 crore profit.
Yes.
And on the depreciation front, what would be, can you give a guidance on the entire annual figure, FY25?
It will be more or less in the same range that is there, the half year, the 87 crores. It will be around 175 to 180 crores.
175 to 180 crore. Okay. And another question that I have is on the basmati. What is the Q2 volume, India and international?
So the Q2 volume in India this quarter, the volume is that is India is 89,000 tons, the international is 82,000 tons.
82,000. Okay. And realization for Q2?
So the realization, the average realization in the Q2 is 102 rupees.
102 is the average. And can you get a breakup of India and international?
64 and 144.
Could you repeat?
63 and 144.
63 and 144. Okay, that's it. Thank you.
Thank you. The next question comes from Raman KV from Sequent Investments. Please go ahead.
Sir, can you hear me?
Yes, Raman.
So you're setting up a plant in UK as well as you're setting up a plant in USA, wherein with respect to US, the new plant in USA, the production capacity is gonna double. And at the same time, from what I understood from the presentation, you're setting up a manufacturing facility in Uganda as well. So can you give me an estimate about when will this plant or setting up of the plant will be done, and from when they will start contributing towards the revenue?
Sure. So UK plant has already been set up, and we just done an inauguration in July.
Okay.
That has started contributing. Regarding USA, we are doubling our capacity of ready-to-eat plant. Right now we are producing 15 million pouches, which is totally sold out. Now we are doubling to 35 million. So, of course, whatever the growth will come year on year, that will be serviced from that increased capacity. And Uganda is a small investment, very small investment. That is mainly for our organic business, where they are putting the soya meal.
No, but when will the US plant will be start? So it's like value addition plant or what?
So already, we had a plant which is producing ready-to-eat product, which is microwave rice. We have set up the plant 5 years back. Now the capacity is fully sold out. Now we are expanding our capacity to double.
So when will this expansion be done?
That's a continuous process,
Okay.
To service the continuous growth of the market.
So, sir, also you said that you're discontinuing Daawat's fortified rice. Can you give...
Fortified, yeah.
I didn't understand. Can you give some more clarity on that?
Sure. So what we have done, 4 years back, 5 years approximately, we have launched in India Daawat Sehat rice, which is under the fortified, because government was promoting, the trend was coming, the fortification. But, that, has not met our expectation in terms of growth and market share. So we decided to discontinue that product.
Okay. Sir, I just have one question with respect to inventory management. So whatever we produce, we pack it and sell it to the retailers. Like they either like a big shop, big chain of retailers or shops at the local level. So if and there is a freight cost involved also. So if there is any damage during the freight, are we supposed to pay for the damages, or it's based on a contract basis?
If I've understood your question correctly, that we operate like any other FMCG company operate. We are accountable, responsible till consumer consume it.
Okay.
So regarding the what you call is replacement, that is very small. Sometimes packet get damaged.
So can you give a figure about what might be the replacement?
That's very less. I don't have right now. But
okay.
Definitely, but that's very less.
Okay.
Not even in percentage.
Okay.
Yeah.
Okay. Thank you.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you so much. If any question, is left or not cleared, I request, everyone to send your questions to our IR department. We will definitely, clarify all queries. Thank you.
Thank you. On behalf of LT Foods Limited, that concludes this conference. Thank you for joining us. You may now disconnect.